Recording of this. Okay, so I'll just start from repeat a little bit of what I just said. My name is Miss K. I'm Benny's mom. I'm Crypto's mom. I started trading in 2020, and I was just blown away by this skill because I'm like, this is such an amazing skill where you can make money from home, from your phone. Even if you're at work, you can make money. And to me, everybody starts off on the same playing field. So it's like nobody really gets an upper hand. Everybody starts off at the beginning, which I love. You're not going to get an upper hand because of your family or because of your education, because of your race, your gender. Everybody starts off at the same level. And I love that about this skill. And I love that you can go up, you can make money as much as you want. There is no glass ceiling. I love the fact that there is no glass ceiling. There's nobody telling you how much you can make. You got to get a raise every 3 months, every 6 months, every year. Everything is up to you. But what you have to do is master this skill. So you all are here. Yes, no glass ceiling. You all are here and you are dedicated. You are committed. And I just want to give you kudos for being here, coming to this training. And if you were here last week as well, this is only our second one. So if you missed it, it's not a big deal. I'll try to cover some of the things that I went over last week. But if you are here for the second time, for the second week, put a 2 in the chat. And if it's your first time, put a 1 in the chat. Welcome back. Welcome back. For those of you that are here for the second week, welcome back. For those of you that are here for the first week, welcome. It's only going to get better, guys. It's only going to get better. So keep tuning in, keep communicating. I'll give you guys my information, my contact information after this. You already have cryptos. I'm in the Telegram. You all are in the Telegram. So please feel free to reach out if you all have questions about anything. Like I said, I love teaching this stuff. I love teaching anything. But right now, this is what I'm passionate about. I'm an English teacher, so you're going to hear me talk about root words in a minute. Just one, though. I love teaching root words because it helps to build vocabulary. And once we build our vocabulary, then you can communicate. And I think that verbal communication and written communication is just the most important thing. So let's see. It is about 12 after. I only plan to be on for about an hour because last week we hadn't really decided, Crypto and I hadn't really decided how often we were going to do these trainings. We didn't know if it was just going to be like once a month. We just hadn't really talked about it, but I just said, hey, you got some new people on that may be wanting to learn a little bit more. Let me teach them. I love teaching. Just let me teach them. But now we've decided to do this on a weekly basis. So instead of being like 2 hours, it may be closer to an hour and 15 minutes. But if you have questions, I'm here to answer all your questions, guys. But I want to talk about risk management. So let me pull up something, share my screen. I think I gotta see. You help me if you see what I'm pulling up. Okay. So here's the slideshow. It says risk management with Crypto Sax Guy. You guys see this, right? Like type something in the chat. I don't, or you can unmute yourself. Yeah. Okay.
Hello.
How you doing? You can see my screen?
Yes.
Okay, cool. Welcome. This topic is again on risk management, guys. So it says discipline, consistency, and compounding. Before we make any money, we have to protect the money that we have, right? Before we make any money, and I do have my notes, we have to protect the money that we have. So people tend to most traders don't lose because they're dumb or they're stupid or they just can't get it. They lose because they don't manage their risks. And when you're trading, when you're in this market, when you're dealing with money, you have to manage your risks. So give me some reasons, put it in the chat. Why do you think most people lose? Most traders. Why do you think most traders lose? lack of patience, chasing candles, greed. Yep, definitely. Over trading. Yep. Risk management problems and FOMO. You guys got it. How about emotions, right? Hasn't your emotions been playing a role when you're in these trades? You like, please, 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 God, please, I need this, please, right? And so we don't want to hope. Yes, we're recording. We don't want to hope and pray while we're in the market. We want to use the skills and knowledge that we have. It's okay to hope and pray. You heard me listen to my gospel. Of course, we're going to pray, but we want to pray before we get in the trade. We don't want to cross our fingers and hope and pray while we're in the trade. When we in the trade, the praying is done. Now it's time for you to rely on your skills. So trading without risk management is like driving a car without having brakes, right? You're going to go fast, but eventually you're going to crash. So, what is risk management? Risk management means deciding how much you're going to risk even before you get in the trade. Decide how much you're going to risk before you get in the trade. And we only want to trade 1 to 2% of our account. We only want to trade 1 to 2% of our account. Yes, we're recording, son. I don't know if you can hear me, but yes, we are recording. So you only want to trade I need to say it over and over. You only want to trade 1 to 2% of your account. And I know that doesn't sound like a lot, but you will see in a minute when I show you this chart how 1 to 2% is going to build up. All right. So if you have $500 in your account, you should not be risking $100 on one trade. You should be risking $5 to $10 per trade because that's 1 to 2% of your trade. Small losses protect you, and big losses destroy you. I want to say that again. Small losses protect you, and big losses destroy you. Is everybody muted? All right, cool. So losses are a part of the game, right? Everybody's going to lose. But when we do lose, we want to lose small. We don't want to lose big. When we do lose, we want to lose small. There are people who are excellent traders and they make, 100,000, 200,000 a day trading. We're trying to all get to that level. I'm sure that's why you're here. But even those people lose. People making 100,000, 200,000. There are people who are making millions of dollars in the market, but they lose too. So when you lose, it's not that you're a bad trader and you don't know what you're doing, because this is not 100% win, right? If it was, everybody would be doing it. So just accept the fact that every trader loses, but when you lose again, you want to lose small. Your job is to avoid, uh, your job is not to avoid the losses, but your job is to survive the loss. Survive the loss. So we survive the loss with our stop loss. So we talked about most traders lose because they don't have a plan. They kind of just jumping in the trade. Hey, it looks good to me. They're trading emotionally. It's like, please God, I need this. My rent got to be paid this month. And then when they do lose, they try to chase the loss by going in the opposite direction. And that's called revenge trading. We don't want to revenge trade. We don't want to trade with emotions. You want to be calm and steady. And I'll talk about that more in a minute. So I think I mentioned this, deciding how much you're willing to lose before you get in. Yep, 1% of the 1 or 2% of your trade keeps you safe. And our stop loss. So a stop loss, it is your emergency exit. It is your safety belt. It protects you in case anything goes wrong. It tells the market, hey, if I'm wrong, I'm getting out, right? It takes away that whole, it's just a fundamental tool, that risk management tool that acts as the safety net. And it's the order that you set in advance, right? You set it before you even get in the trade. You know where your stop loss is going to be because you put it in your chart. You put in your stop loss, and it just says when price reaches a certain point, it's your defensive tool, right? It makes sure that you live to trade another day. It makes sure you live to trade another day. So again, we're not going to hope. That's not a strategy. We want to actually teach you strategies, but hoping, praying, wishing is not a strategy. So the stop loss is there to protect you. We're not going to trade with our emotions. Even if you win, you should still be even killed, right? And so, for example, we want to have at least a 1 to 2 risk to reward ratio when you're getting in a trade. You want to have at least a 1 to 2. So if you're risking $10 uh, to make $5, that's not a good trade. But if you're risking $10 to make 20, that's a good trade. Or if you're risking 10 to make 30 or 50 or 60 or 70, those are all good trades, right? So good traders think in probabilities and not promises. So the biggest thing you can do is to trade with your emotions. And your biggest enemy is not the market itself. Your biggest enemy is going to be your own emotions, your own personal emotions, right? So instead of having that FOMO, instead of having that greed, revenge trading, over trading, we're going to think smart and we're going to plan. You're going to be like a lion. A lion don't just chase its prey. A lion just watch. Okay, I see you, I see you, I see you. And then when it waits for the perfect time to pounce on its prey, it's not going to waste all that energy, right? I remember there was, when I first started trading, I was not using a stop loss because in my mind, hey, I don't lose. What they say, it ain't over to the fat lady scene. So I'm like, even price is going the wrong way. Let's say I put in a sale, price just buying up, buying up, buying up, and I'm just seeing my money subtract minus 50, minus 60, minus 70. And I'm just like hoping and praying. It's going to turn around. It's going to come back. It's going to come back. Now it's minus 80, minus 90, minus 100. And I'm just like, well, I ain't lose because I didn't put in a stop loss. It didn't hit my stop loss. How is it going to hit your stop loss when you don't put in a stop loss? But I would just wait and wait and wait. Now it's minus 300, minus 400, minus 500. And now I done lost. Okay, now okay, $500. Oh my God! Now close the trade. When all I had to do was set a stop loss and protect my assets. Right? That's what we want to do. We don't want to risk more than we can gain. We want to protect the money that we have. Anybody play football in here? I don't know much about it, but I'm gonna try to use a football analogy. And then what's the one girls play? It's another sport. I think I played it like one time. What's the sport that girls play that's similar to football? Well, in football, the job is to protect the quarterback, right? You have to think that way when it comes to your account. Protect your account. It doesn't matter how big or how small your account is. Your job is to protect it. We're not going to just leave it out there and then let them get ran over by the other team and you know, or risk fumbling the ball.
Cities and just overall providing free events.
Okay. So yeah, if you feel yourself and you're in the trade and you're angry and you're emotional and you're revenge trading and you feel desperate, that's not the time to trade. That's not the time to trade. Calm traders last. Emotional traders blow accounts. Anybody ever blew an account? I mean, I can admit that I've blown an account before. Anybody admit that they have blown their account either from all those emotions I mentioned, FOMO, greed, revenge trading? We blow our accounts and then we today. It's okay. It's okay. We've all done it. We've all done it. And then you got to go refill your account again. And, like when I lost that $500, because I put in a sale. I could have, if I would have had my stop loss, maybe I could have just switched it around and bought. But no, I'm just like, it's gonna come back, it's gonna come back. So now, since I lost 500, now I gotta go back in and increase my lot size even more, put in the buy, because that's the way price seemed to want to go. So I'm gonna put in the buy, double my lot size, and then now price is done turned around because I let it go up so far that now it's ready. So now I don't lost again. And now it's like, you know. So we don't want our emotions involved. We want to gain the skills necessary that's going to make us profit. And if your account is small, that's fine. Everybody started off with a small account. I would recommend that everybody starts off in demo just while you're learning. Some people are like, no, I just want to jump in with 2 feet. That's fine if you have the money to jump in with 2 feet. But if you know you don't have it, if you know you take it from your rent money or grocery money or some other bill money, get on demo. Nobody knows if you're on demo or live. So while you're learning, just get a demo account. Don't feel like you're losing money that you could have had if you would have had a live account sooner. You want to get the skills first, and then the skill will grow your income. The skill will grow your account. And one more thing about that, and then I'm going to move on. But let's say I have $1,000 in my account, and I said you're supposed to risk 1%, right? Maybe 2%. Can somebody put in the chat how much is 1%? I teach English. I teach words. I don't like numbers, but I respect numbers. So put in the chat how much is 1% or how much is 2% of $1,000. Okay. I see somebody said 100. 200 for 2%. Give me some more guesses, guys. How much is 1%? How much is 2% of $1,000? You have $1,000 account, and I'm telling you that you should be trading 1 to 2%. Okay, 10, and 20, 200. Okay, so with the $1,000 account, guys, you only want to be risking $5 or $10. $5 or $10. That means if I lose, say if it's 10, if I lose 5 trades in a row, I lost $50. But I still have $950 in my account. But if I risk $200 5 times, right? I traded 5 times the first time. I lost $50, $10 each. I trade 5 times this time, but this time I'm over leveraging. I'm revenge trading. I'm FOMOing. I'm risking 205 times, lost all 5. Now my account is blown. It's just been 1 week. Or if you trade a lot, it's just been one day. You took 5 trades in a day and your account is blown in one day, or your account is blown in 1 week. And now you saying trading don't work because you was emotional and you risked way too much. So you want to protect your account. Again, it doesn't matter if your account is $100 or $10,000. Your job is to protect your account and see it grow. We're not gambling. We're not saying put it all on black. Because if you're going to gamble, you could have just went to the casino. We're trying to learn a skill that's going to profit us, to use the profit squad, right? We're the profit squad. We're trying to be in profit. And so, yeah, I remember my first Bitcoin trade because I'm trying to learn um, what is it? Blowfin. I'm trying to learn Blowfin. I get on there. I'm used to TradingView, which I'm going to talk a little bit about TradingView, but I'm used to TradingView, so I don't really know much about it. But I get on Blowfin. I'm looking at the charts, and I think I put in 3x leverage, and I won like 95 cents. You couldn't have told me that I didn't win $95 because I was right. So all that it don't matter if you say, "Oh, I only won $3." only won $10. Long as you win, because you could take that $3 and make it 300. And you could take that $10 and make it 1,000. And I could take that 95 cents and make it 9,500. Again, you learn the skill first. The profit comes later. Learn the skill first. So you guys are here to learn the skill. And I said I was going to give you a root word. So small losses equal survival. You can survive 5 losses at $10. You can survive that. That's only $50. But big losses equal destruction. Big losses equal destruction. So let's talk about the word destruction. Destruction has the word struck in it. Struck, Struct, struck. Give me some words in the chat that have struck in it. I'm an English teacher. Y'all got to give me some homework. Do some homework for me. Give me some words in the chat that have struck in it. For example, construction, the little orange cones you see on the highway, construction. Struct. Give me some words that have struck in it. This is what I do with my class. Give me some words that have struck in it. Structure, structural. Keep them coming. Give me some more words that have struck in it. We have right? You can add a prefix, deconstruction, instruction, which is what I'm doing now. Instruction, instructing you are. Obstruction, something that may be in the way. Obstruction, obstruction. Infrastructure, infrastructure. So struck means to build, right? We want to build our account. That's the whole point of me having you guys talk about struck. I want you guys to build your account, right? Build your account. And then, so the last point I'm going to say about this risk to reward is your account is your business, so treat it like one. This is your business, guys. You have decided to take a step towards your future, right? To do something different. You may still have a job, but I know you don't want to be there forever. So your account is your business. Treat it like it's your business. Don't get upset and minimize when you only win $3, 95 cents, $5. You're going in the right direction. So that's a good sign. We want to protect first. The profits come later. I forgot to tell you get a pencil and pen, but hopefully you came prepared for these trainings. You want to protect the money that you do have first, and then you'll see the profits come later. Discipline, right? We got to be disciplined. Discipline even beats talent in trading. And then the goal is consistency. Show up, come to the market, show up. You can't just trade on Tuesday like once a week. You don't even know what the market did the other 6 days. Like, even if you don't actually place a trade, you need to be pulling up that chart and looking and seeing what the market is doing. So be consistent. Um, Slow money is safe money. Slow money is safe money. And so I have another thing I'm going to show you guys. Small daily growth beats big emotional training. Take those small steps forward because you're going to continue to go up when you take small steps. Sometimes we minimize, oh, I'm not doing enough. My account is not big enough. I don't have any money. But as long as you are going forward and you're winning even the small trades, you will continue to go forward. So just like in football, you want to protect your capital and let the math do the work. So let me show you what I mean by letting the math do the work. How do I make it bigger? Okay. So you guys, this is called a compounding tracker. Um, All right. So say you start off with an account that is $5,000 and you only trade 20 times for the month, right? This is just say this month right here is January, every 5 days. Some people are trading more than that. We know it's 30 days, but we just gonna say that you're only trading 20 days. Ah, let me get back. I was trying to pull up you guys' faces, so I might not be able to see you all. So you start off with an account that's $5,000. You take one trade. Let's just say you're doing one trade, excuse me, one trade per day. You increase your account by 1%. Now your account is $5,050. Then the next day, you still have that same $5,050, but now you're going to be a little risque, and you're going to increase your account. You're going to increase your risk to 2%, and you win. And your account now is $5,151. You continue to do that every day for what, 12 months? Sorry, the bottom is not color coded, but you can see the green is what you will have at the end of every month. So just after 1 year, look how much you guys will have. 2,900, $296,519 off of 1 to 2%, right? So it can be done. Now, say your account is not $5,000. Um, I'm going to, let's see, where did I put it? Pull this up. And if you guys would like a copy of this, put your email in the chat and we will get that out to you. We're talking about risk management, right? We're talking about protecting your account. So when you get this, you see what it says. Please make a copy before editing. Please make a copy before editing. So I'm just going to, how you make a copy is you come to file. I don't know why it's moving slow. Okay. It's moving slow. Let me see if I can come back to the original. I wanted to do it with the copy to show you guys, but um, I'm gonna see if I can change this account to 500. See how the numbers just auto generate for you guys? If you start off with an account that's $500 and you increase your account by 1%, sometimes two, at the end of 12 months, you're going to have $29,651. $29,651 off of a $500 account. So again, what about if you only have $100? The goal is taking those small steps forward, 5,930. And if you just got it like that, you about to get your taxes and you want to throw in some money, well, yeah, we'll keep it at $10,000. Just off of 1 to 2%, $59,303, guys. I'm gonna stop sharing this. But if you would like a copy of that, let me see. I see. Put your email in the chat, and we can send it to you. You can put in how much. You can change the starting balance to how much you have. So yep, crypto. I see your email. Kid oh me, you know what it is. E. Kinley, Christina. We'll make sure you guys get this from either myself or crypto. But again, protect the money that you do have. We're not trying to blow accounts out here, guys. Does that make sense? Let me see. My sister was texting me. She was able to reset the password. I don't know if she's on here, but all right. Any questions about that part about risk management? Because I think that's important. We just forget that we have to, we just think that we just gonna be the one that's lucky, the luck of the Irish, and gonna double our account in 2 3 days. And that may happen to your cousin Johnny, but Johnny is good at everything and he's lucky at everything. But it may not happen to the rest of us. So, any questions about risk management? Okay. Um, Okay. So I pulled up TradingView. Some of you guys said that you were here last week, and then some of you guys said today is your first day. So I wanted to go over. I asked you guys at the beginning what were some of the things that you wanted to cover, and you guys said entry. And if you just joining us, you can answer that question too. So the question was, what are some things that you want us to train on? We said we're gonna do these trainings, probably last about an hour, 15, 20 minutes. Um, so what are some things if you wasn't here at the very beginning, I asked what are some things you guys want help on? What are some topics that you guys want training on? And someone said entry and exit zones, dead zones and entry, liquidation, and charting. If you are just joining us, if you weren't here at the beginning to hear that question, what else would you guys want? Put it in the chat. How to read fair value gaps, okay? I'm gonna try to give you what you want. So closed mouths don't get fed, guys. If you have a question, put it in the chat. And then for the ones that have already answered, I'm gonna try to go over as many of these as I can today. Are you guys trading on TradingView? Or are you trading on Bit2Next? Are you trading on Blowfin? What platform are you guys using to mostly look at your trades? I want to know also who needs help with TradingView. Blowfin, okay. Blowfin, trading, three. Okay, TV to watch the trade. Yeah, I tend to like look at TradingView and then I place my trades. If it's Bitcoin, I place it on directly onto Blowfin, or I use um, MT4. Agree with all the topic mentioned. Okay. All right. Cool. 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 So last week I talked about support and resistance, and you guys said charting. This is current Bitcoin chart. I think I want to use something that's not open, so we're not just looking at the candles moving. So I want to pull up a forex pair, or this is Nas. Move out my way. I want to pull up EU. I tend to trade EU a lot, but really I'm just trying to get to a blank chart, so I'm just really moving everything out the way. Um, all right, entry and exit. Right now, I'm just drawing the uptrend where we have our higher high and our higher low. So say, for example, you see this, right? You see the higher highs, you see the higher lows. So this is your high, this is your higher high, this is your low, and this is your lower low. So this is pretty much telling you that we're in an uptrend because we see higher highs and we see higher lows. So say if you want to get in this market, the place where you want to enter, because you guys said your entry is right here. Right here, right here, right here. Let me change this to an arrow. Right here at the bottom. You don't want to get in right here because what's about to happen? It's about to be a pullback or a retracement. We talked about how all of these words have different jargon. Don't get intimidated by the vocabulary. Don't let the vocabulary run you away. But every word has three words: pullback, retracement, sometimes correction. You don't want to get in right here because now you're about to go down and then you're going into the negative. So you want to get in at that lower low when price is about to go up. And so where do you get out? You're going to look left at the previous swing high. So over here, if I'm just using these candles and I'm not trying to go, I ain't even going to look at that big candle. This must have been news or something. Well, maybe. Actually, let's just use this yellow. Let's just use this yellow. I'm sure I put that up there for a reason. So your exit point, your TP is going to be right here at this yellow line. So I'll just mark that as well. TP or take profit. So what I love about, trading view is once you put in your line there, maybe you grab one of these horizontal lines, put it right here, and the number is already going to be highlighted for you. You're going to put in your TP as 1.16126. You're going to put in your stop loss. So right here, this is a long position. We said we was getting in right here at this lower low. And we're going to drag our green line up to our take profit. And we're going to put our stop loss anywhere below that lower low. So I think where we have the red line right here is pretty safe. So now, as you can see, our risk to reward ratio is 1 to 7.48. It's almost a 1 to 8 ratio. So we might be risking $10, but we're going to win 80 if the trade plays out the way we want. I can, put it down right at the yellow line. But that's where you want to enter, at the bottom, at the pullback, at the retracement. And you always want to look left to get your TP. Your stop loss is always going to go underneath that swing low or underneath that lower low. So let me do an example with the downtrend. Okay. I'm just going to delete this so it can get out of my way. But we know we got in right there at this black line. And we know our stop loss is 1.15893. It's red. And our take profit is 1.16124. So now let me do an example. Everyone make sure you're on mute. I don't want to click the wrong thing. And then I change my screen. So let's do an example of a downtrend. One, two, three. We can start right here. Let's make this, change the color to red since it's downtrend. So we got our low. No, wait. Yeah. We got our low and our lower low. Our high. Our higher low. So because we continue to see that this swing is lower than this one. And then let's just keep going, I guess. You come up here. Come back there. Okay, now I'm gonna let me just stop right here. As long as we keep seeing that this is lower, 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 we can be confident that we're in a downtrend. So then we would come up here and click on this short position tool and say we might want to get in right here. We're going to drag this to our TP, and then we're going to put our stop loss a little bit behind where that lower low is. So our stop loss would be 1.16039, and our take profit would be this green highlighted number, 1.15860. And this risk to reward would be like almost a 1-7. So we, again, risking $10 to win $70. So you want to get in, to answer you guys' question, you want to get in on either lower lows if you're in an uptrend, or I feel like I'm saying this backwards, higher low. Yeah, I said this backwards. This is higher low. Sorry. Higher low, higher low. Yeah, lower low. You want to get in at the higher low or the lower low. You guys mentioned something about liquidation. I'm gonna go to their actual charts for liquidation. What's a good example of using this? This definitely looks like it could have been liquidation just because of how big the candle is. But let me see if I can find something else. All right, let's just use this right here. And I'm gonna delete this yellow line because it's not relevant to us right now. Let's just use this area right here. This is the 5-minute chart too. And time frame doesn't really matter right now. So don't focus on why she on 5 minute. I just open up the chart. But say for example, no. Well, yeah. Right here, you see price getting higher and higher and higher and higher. It got a little bit low right there. So let's just say right here, you may decided to get out because this did not go higher than this. This would have been like an equal low. Let me see. I'm trying to point to these two right here. So let's just say you got in on, well, that would have been, first of all, way too late to get in because price came up on that downtrend way down here. So it would have been really, really late for you to try to get in up here. But let's just say you did, because you have FOMO and you have fear of missing out. And so you like, okay, let me get in. So you put in your buy trade because you see that price is going up and up and up. You're looking left. You look left and you see that this is the highest swing that we just had previously. So let me change this back to cross just so you can see I'm lining up with this. So this is your TP, right? This is your TP. You put your stop loss right here. Let me zoom in. So you put your stop loss, let's say be right here. I wish I did have the ability to rewind, but I don't have that feature. But you put your stop loss underneath this area. But then you get liquidated right here just because of this candle that's sticking out right there. You got liquidated, but you were right. Price is still going in the uptrend. It did not stop the uptrend. But because your stop loss was so small, you didn't leave enough breathing room for your stop loss, you might have got liquidated by that candle right there. You might have got liquidated by this little candle right there. And then now that you got liquidated, you might get back in the trade and try to rebuy your previous location, but you'll be paying a higher price versus when you first got in. And then somebody had a question about fair value gap. So let me just go over here. I'm gonna erase this. Try to draw 3 candles. Oh no, not like that. I don't think I'm used to drawing vertical rectangles. Let me see if I can do it with that first. I'll just see if I can find one on the chart. I don't see any fair value gaps. Fair value gap is, let me write this down. It is the gap between the first and third candle. I'm gonna scoot it over so you guys can see. Fair value gap is the gap between the first and third candle. So when you come over here, you see this is 1, this is 2, and this little one right here is 3. So yes, there is a fair value gap right here. What you do is you go to the wick, you start with the first wick down to the third wick. And that is your fair value gap. I guess I can leave that right there. This is your fair value gap. So price dropped so fast and so hard right here between this first and third candle that it didn't give buyers a chance to buy. So in order to, make everything equal again, the price is going to come back up and allow the buyers to buy again. Let me make this a little bit better. Go down just a little bit. So it starts from the end of the first wick to the beginning of the third wick. All of this is fair value gap. And what usually happens is price will go to the middle of the fair value gap. So there's another tool over here. I had it as my favorite, but then I removed it because I really wasn't using it too much. Let's find it. It's shaped like a box. One more time, one more time. Look, okay, maybe it's up here. Okay, I think it's this GAN box. So what you would do is you would put the GAN box at the top to the bottom and you find the 50% mark. What I usually do is just grab this horizontal line, put it on the 50% mark, then I delete the GAN box. So what price normally does when it comes to fair value gap, it goes up to the 50% mark. It'll eventually, we don't know how long it's going to take to get there, right? It's going to be a lot of pullbacks, but it'll eventually go to that 50% mark. And then after that, it'll head back down and continue the bearish trend that it started. And then the inverse fair value gap is basically the same thing, but in a bullish market. So let me see if I see any inverse fair value gaps. Well, I guess this one is inverse because it's downtrend. And it don't have to be like a super big long candle like that. Let me go to like an hour time frame To reset, you just click this reset chart view. Okay. So, and you don't, all the candles don't have to be the same color either. So for example, I'm going to use this big candle right here just because it's a little bit visually easier to see. And so that's the third candle. The green one is the second candle. This little red one is the first candle. So they don't have to be the same color. But you go from the third to the first. All of that is the fair value gap. So you see how price, it came up on this uptrend. It went up so fast again, sellers didn't really have a chance to enter the trade. So it's going to come back down. This time it went all the way to the bottom. So the fair value gap price could go to the bottom, it could go to the middle, or it could just kind of tap the very top of the fair value gap. But it's going to come back down to the fair value gap. So that answers the question too about entries. If you think, oh, I missed this big jump here, I missed this big candle, you don't want to FOMO. You could have got in right here because of what? It retraced. Price retraced right there. So I'm just show you what I mean. Right here, price came up, it retraced down, it continued up. But if you see that you missed it, or if you think, because we don't want to get in and buy things when it's expensive. As price goes up, the price gets expensive. We want to wait till it goes back on sale. So we just going to wait till price comes back into this fair value gap, and then that's when you get in. So when you saw this candle right here rejecting, that could have been a sign it's time for entry again. Or you could have waited to this one, because if you would have got in right here, you would have just had to deal with some drawdown, which means you're going into the negative. We trying to buy, but you can see price went back down. So you don't want to go into like the first time you see it. Remember, we're trying to be like that lion. We're trying to wait on our prey, sweating and running around and chasing the candles. So you wait a second time. Don't get stressed out. Wait a second time for price to come back here. When price gets back here, you buy. So you, let me see. I'm supposed to be on the meeting now. Okay. So that answered the question about entries and where your stop loss should be, where your take profit is, and fair value gap. Okay. I'm just going to talk about charting because that was the last question. I'm going to talk about that for a few minutes, and then I think we're going to wrap up, guys. So I'm just use EU. This is the 1 hour. I mentioned last week that there's 3 types of traders. You got scalpers. Scalpers only stay in the market for about anywhere from 5 minutes to 1 hour. And you have day traders. I would consider myself a day trader because day traders are in the market anywhere between 2 hours to maybe, I'll say 4 hours. And then you have your swing traders. I should put equal sign. Swing traders stay in the market from 4 hours to even like weeks and months, days, weeks, maybe even like a month or two. And you're going to figure out the type of trader you are based on, how much patience you have, how much risk you want to take. 5 minutes. So if you're a swing trader, you might go to the daily, you might go to the weekly and get your bias, which means you're going to come here, you're going to look and see if you see price in an uptrend or a downtrend. This looks like an uptrend. But if you're a day trader, you could just go to the hour, press reset. You could just go to the hour. And it looks like here, we're in a downtrend. If you come here, you can see that we've been in a downtrend. Let me erase this. Okay, we've been in a downtrend on EU since January 12th. So just a couple of days. You don't have to look left for weeks and weeks and weeks and weeks. Just look left only a couple days. And you're going to be looking for your swing high and your swing low. I'll go to Bitcoin since it is actually moving. I'm going to delete all of my previous joins. So if I was to chart right now on Bitcoin, we can see it's kind of consolidating, but I would mark the highest point that price has been recently and the lowest point that price has been recently. And so right now it's kind of in the center of both. And we can see over here when we look left that it's been in an uptrend. And right now, just probably because it's Saturday, it's consolidating. You have small candles. It's not a lot of people trading right now. The banks are closed. So there's no real value. This is a downtrend right here because why? We got the lower low, we got the low, lower low, lower low. This is all like equal. And sometimes when you get equal lows or equal highs, price will, like right here, we got equal high, and then price drop down. So if I'm looking for support and resistance, I'm going to look at where price reacted the most. Where did you see price go in one direction and then change and go the other direction? Where are the areas that, price has been frequently? So in addition to drawing my swing high and my swing low, I'll come look for support and resistance, which we could probably say is right here. Price has just been, it came here, came up, came back down, came up, finally came back down, up, down, up, down. It's like, so now I would tell myself, it looks like when price is above this line, we can expect a buy. And when price is below this line, we can expect a sell. So if you, like Bitcoin has 53 minutes left on this particular 1 hour candle, but if I see price going down underneath this black line, now I'm thinking sales because everything above the line was bullish. And so I would have my TP right here because why? This is where it stopped the first time. Well, the last time, this is where it stopped. So that means it stopped because there are buyers right here. It's buyers right here. And then we have sellers right here. Oops, I just clicked. Protect. So there are sellers right here. So above the line, right? Because price, um, say for example, right here, price is coming up. The buyers are down here, just like over here. The buyers are down here. I'll move this over so you can see. The buyers was down here. They pushed price all the way up. Then when price came up, it starts selling, which means it's sellers right here. This area is all sellers. So when you buying up to sellers, and when you sell, you selling down to buyers. So if it gets under this line, maybe even retrace. Remember, we don't want to trust the very first time we see price go underneath that line. I'm trying to make it bigger. It's selling right now, but it might just trick us. It might liquidate us. So we'll just wait for it to come down underneath that black line, wait for it to retrace back to this black line. Then if it falls again, we can expect it to continue at least to here. And if we want a second TP, we will look left. Now I gotta zoom out. Why is this thing? Now I gotta zoom out to see where I can get my second TP. I would probably say my second TP would be all the way like down here. Any of these levels, where you see red candles, red candles, red candles, red candles. All of those levels means that there are sellers there. But at this point, it was more buyers because it went into a strong uptrend. All right, does that make sense for everyone? If price goes above this line, I'm going to expect it to resume the bullish trend that it had over here on the left. So if it goes above that line, I will, let it retrace, come back. We don't want to be in drawdown. Let it come back and then let it continue up. This would be TP1, right? Where this black line is, because price respected, let me draw an arrow. All this right here, price respected. It was like, I'm not going up, I'm not going up, I'm not going up. So it respected this line. So this would be TP1. TP2 would be where? Right here. It's not too far above it, but hey, this is where price stopped and respected previously. So this would be TP1. The second black line above it would be TP2. And if you wanted another TP3, you would kind of zoom out, especially on the 1 hour. Always find your stop losses and your take profits on the 1 hour. You can't go by the 5 or the 15 because, well, maybe on Bitcoin you can because it's so much more liquid. Remember, I said I'm coming from the Forex family. It looks like price haven't even been this high up in a long time. So I'm not going to even probably look for another TP. Oh, yeah. See how far I had to go back to November. And so you would just look left, look where price has been. Let me try to zoom in. Maybe mark the next TP right here, right here, where price respected that line. Slide my way back over. Dang, where was I? I'm gonna just press reset. So you have TP1, TP2, and then all the way up there would be TP3. Always look left, always put your take profits in your swing, put your take profits at previous swings. So then based off of this, I would choose my long position. If I was going to buy, I would put my stop loss underneath, either underneath here or to be safe underneath here. Especially if you're going for that TP3, which is way up here, like that would be a swing trader, right? Because you in the market for a long time. You're gonna just let the candles play out. You're just gonna wait until price comes way up here. You don't care how long it takes. That's a swing trader. If I'm a swing trader, I'm gonna put my TP3 up there. I'm gonna put my stop loss underneath this low. And so that's a 1-to-4 risk to reward ratio. If I'm a scalper, I'm gonna put my stop loss underneath this low. Hope you all can see. If I'm a scalper or a day trader, I'm gonna put my stop loss under here. I'm gonna slide this down. So underneath the last few candles, maybe give myself a little bit more breathing room in case price wants to liquidate me. Some weird candle comes down here, stops me out, and then continues up. But in this case, right, if I'm scalping, my TPs, scalpers don't even have 3 TPs. They only just get in one time, like I said, for about 5 minutes and then get out. So this is what it would look like. It's still a good trade, a 1 to almost 4 risk to reward ratio. All right, guys. Today we covered risk to reward management. It is recorded, and I got some of your emails if you want that Excel compound sheet. How do I go back to? I can't see nobody. Any questions before we wrap up? I'm reading the comments now because I couldn't read it when I was showing my screen. Let's read it. is the red line support. I gotta remember. Already selling, already selling BTC. Okay. Any questions? Thank you so much. It was great. You're welcome, Christina. How can I put a TP on Bluefin? It's really the same way. Bluefin and TradingView are very similar. So you can even use both. You look at TradingView. Once you click on that rectangle, the number on the right is going to highlight. That's the number you put in your um, as your stop loss and take profit. You're welcome, Lady Wiggins. We're gonna have different topics every week, so continue to tune in. I don't see any questions, guys, so I'm gonna bid you adieu and I hope that you all have a great 3-day weekend if you off on Martin Luther King Day. If you want the recording, I think Crypto is going to put this in the Telegram. All right. Going once, going twice. Questions? Thank you, thank you, thank you. You're welcome, guys. I thank you all for tuning in. On Telegram, what is my name? I think I said Bird last week, but then I looked and saw that it wasn't. Um, I know that sounds funny. What is my name? I think it's just Les Black Jones, but I gotta go in there and see. I'm gonna say some. Ooh, what did I just do? I'm doing too much. Okay, I'm gonna say something in the Telegram right after this, so you can know that that was me. I'm just gonna say thank you to everybody that got on. So all of our content, all these trainings are gonna be on Crypto's YouTube channel. You know, I'm the mom, but I work for him. So all right, guys. I'm not seeing any questions. I appreciate you all. Enjoy the rest of your Saturday. Remember to protect your account and just celebrate those small wins and keep moving forward. You guys take care. Be blessed. Have a good one.